You know, that April 15th deadline is right around the corner, and for a lot of seniors, it brings this real sense of anxiety. Maybe you're still waiting for the right paperwork, or maybe you just don't have the cash on hand to pay what you owe. And this can trigger what we call the freeze response, where you just do nothing. Well, today, we're going to do a little forensic audit to show you why that freeze is the single most expensive mistake you can possibly make.
And believe me, doing nothing is incredibly costly. It all comes down to a really dangerous and common myth about filing for a tax extension. So let's go ahead and bust that myth right now. All right, let's dive in. To protect your wealth, you've really got to understand how the IRS thinks. They don't just see one deadline. They see two completely separate duties you have: your duty to file and your duty to pay. And this is the part that trips so many people up. Filing is just about the paperwork, sending in your forms to tell the government what you owe. Now, that deadline, you can extend it. Paying, on the other hand, is about sending the actual money. That deadline is set in stone, and a normal extension won't move it. And this brings us right to the heart of the problem, the extension myth. It's this false belief that, hey, if I can't pay, I shouldn't bother filing for an extension. It kind of feels logical, right? But it's a total trap. And it's based on a complete misunderstanding of how the IRS penalties actually work. So, let's get into that forensic audit I mentioned. We're going to pull back the curtain on the Internal Revenue Code, specifically Section 6651, to look at the two big penalties. And what you're about to see is a drastic, almost unbelievable difference between them. Just look at the difference here. The penalty for failure to pay is only 0.5% per month. It's not great, but you can manage it. But the penalty for failure to file, well, that is the wealth destroyer. It's a massive 5% per month. That is literally 10 times higher.
Think about that for a second. The IRS penalizes your silence 10 times more harshly than it penalizes your debt. They are way more concerned about you not communicating, not filing the paperwork, than they are about you not paying right on time.
Let's put some real dollars to this. Say you owe $10,000. If you freeze, do nothing for 5 months, that 5% failure to file penalty will hit its maximum of 25%. That's a $2,500 penalty. Ouch. But if you file an extension and pay nothing, you're only on the hook for that much smaller 0.5% failure to pay penalty. After 5 months, your penalty is just $250.
So what does this all mean? It means by taking, 10 minutes to file one simple form, even if you pay $0 at the time, you just saved yourself $2,250 in this scenario. That is a massive return on your time.
Okay, so filing that extension is your shield against the big penalty. But, and this is an important but, we have to talk about interest. Remember, an extension to file is not an extension to pay. That interest clock starts ticking right after April 15th, no matter what. As of right now, the interest rate on what you owe the IRS is 7% a year. You really need to think of this as the interest rate on a loan you've just taken out from the government. And it's not a cheap one. And here's the kicker. It's not simple interest. It's compounded daily. That means every single day, the interest gets added to your balance, and the next day, you're paying interest on the interest. It's a snowball rolling downhill, and believe me, it picks up speed fast. So let's put it all together. That interest clock starts ticking right after the deadline, period. If you have the money, it absolutely makes sense to pay the bill and stop that clock from running. But if you don't, and this is the most important takeaway, you absolutely must file that extension anyway to protect yourself from that huge 5% penalty.
And this all leads us to the practical solution, the actual thing you can do. I like to call it the wealth shield because that's exactly what it does. It shields your hard-earned assets from these crazy and frankly unnecessary penalties.
So, the big question is, how do you do it? How do you put this shield in place? Well, it's actually remarkably straightforward. The tool you're going to use is a simple one. IRS Form 4868, and the most important word on that form is automatic. You're not asking for permission, you don't have to hope you get approved, you just file it correctly and on time, and poof, you automatically get 6 more months to get your paperwork sorted out. And here is the exact strategy, step by step. You get the form, you can find it right on the IRS website. On line 4, you make your best guess, a good faith estimate of what you think you owe. But then, and this is the magic trick, you go to line 7, the one that says amount you're paying. And right there, you write in a big fat 0. You're officially telling the IRS, hey, I'm not paying right now, but I'm also not hiding. You submit that by April 15th, and you've just sidestepped that whole 5% penalty trap. So, If you take away just one thing from all of this, let it be this. The IRS punishes silence far, far more than it punishes debt. By communicating, by filing that one simple form, you are taking the single most important action to protect your finances, regardless of whether you can actually pay or not.